Welcome back, everybody. This is Crypto Ed, and we are close to the end of our second day of CoinFest. So thank you, everybody, for joining us, and much props to you guys if you have been joining us since the very beginning for the whole 2 days. Today, and for this session, I'm excited to introduce to you Robert Paddock. He's going to be covering on some introduction topics on how to do crypto trading. For the whole conference, you've been learning about how to do DeFi. You've been learning about crypto taxes and NFTs. And I think probably some of you have been wondering well, how come we haven't talked about trading and such? And well, here it is. So yeah, so about a bit about Robert. I've known Robert for some time, and I've heard and I've spoken on different technical charting and such, and I know that some of his charting has been pretty good. Been dead on accurate, and yeah, I've learned a lot about how to chart myself from him and also a lot of other people. And sometimes when you have instances like what we just saw this last 24 hours with Bitcoin and the whole market going up and down and all over, it could get emotional when you don't know where things could go. And sometimes just having some basic sense of charting and just knowing how to do that technical analysis, it could help you. It could at least give you some sense of sanity when things are going everywhere. So yeah, so Robert, the stage is yours.
Awesome. Sound good? Awesome.
Yep.
Congratulations for being here, guys, because you're about to I'm going to share with you some great information. A lot of wonderful speakers we've had on this so far on CoinFest. I've been tuning in and learning myself. It's always good to be invest in what you're familiar, but always get familiar with more things. Before I get going, I'm not a licensed financial advisor. Everything I say is strictly for education, entertainment purposes only. Do your own due diligence. Investing is inherently risky, and you need to understand what you're doing at your own risk and liability. Consult with the services of a certified professional before making decisions. Don't hold anyone on this call liable for any decisions you make. You understand that yes, you can make a substantial amount, but you have to know what you're doing. It's like driving a car, right? You can do it safely or not safely, but at the end of the day, risk is not knowing what you're doing, right? Not obeying the rules of the road, not wearing a seatbelt and stuff like that. So there are ways you can mitigate the risk. I'm going to talk a little bit here. I know we had another speaker scheduled, but he wasn't able to show up. So I'm glad to come in here and teach you guys how to have the problem. We had a wonderful presentation earlier about taxes and how to, be aware of them and how to navigate taxes in the crypto space. Well, I'm going to be giving you the problem of what to do when you make too much, so that you have the problem of dealing with your taxes. Okay, so we're going to be talking about how do you make sure you make as much as possible and then give your tax advisor a lot of work to do. So at the end of the day, it's important to sum up trading with, I guess the best way I could say is, imagine you're walking through a forest and you come across in the middle of your pathway, dead and right in front of you, is a grizzly bear. Are you going to continue walking the same path at the same speed, ignoring the fact that there's a grizzly bear in your path that is hungry? Or are you going to maybe detour and, alter the course that you're heading the direction? And those that don't adapt will die. And this is why it's important to learn trading, shuffling from one asset to another, one crypto to another, and going with trends that are in your favor rather than just being stuck on one thing all the time. I guess we could sum up, let's start with this. Let's sum up with what are the different 10 levels of people that are involved in the cryptocurrency space, right? So first of all, you got level 0 here. You could attribute that to, let's make it red, actually. Level 0 is you're like, what trading? You're not even aware that it exists. And I want you to rank yourself honestly and realistically on where do you fall on this scale so that you can then see where you want to be going to the next level. So the first level is what is trading. Level 2 may be I've heard about it, but because my buddy does it, right? So this is the next level of trading that you may be come across or not. But most people will be beyond this level. They're already interested in it, especially if you're on this video and you're watching this live or recording. The other one is I want to get involved, but don't know where to start. So now you're seeing, okay, not just watching other people do it, now you want to do it yourself. And where do you go to begin, right? So this one is going to be surprising. A lot of people here don't realize, but now the next level is where the hodlers come in, believe it or not. This is where people are doing a lot of the get in and hold on, or buy and hold. Let's call this just simply, I'm going to buy something and keep it forever. You ever hear anyone say that? So buy and hold forever, regardless of if there's a grizzly bear in my path, I don't care. Holding on for dear life, right? And that could be dangerous if, especially times in the world, they're changing faster and faster than ever before. Technology especially is changing faster than ever before. In fact, we have crypto adoption is almost double the speed of the internet adoption when it came out, which was making everything else look like it was in slow motion. So this is very, very fast. And when times are changing, you want to be able to not just keep stuff, or you'll end up in the past. Who saw the article with, Warren Buffett's right-hand man, Charlie Munger, saying, hey, I am really upset that they, all these crypto, he wishes that the crypto didn't exist, right? And he's happy that China is banning it, because a billionaire, of course, he would rather not have to learn how to adapt and change and grow with the times, or he may one day find that his $1 billion a dollar may be worthless, right? So then you lose your entire fortune, and it's work to stay up with the times. So the next step would be, okay, you know what? I'm interested in getting some information and I want to learn more info. Okay. And where you may start is on YouTube. The problem with YouTube is 95% of people are just regular, experience levels, and they're not very familiar with what they're doing. You got to be careful. It's a full-time job, just sifting between who you're listening to and who you're not listening to. So there has to be some caution there. So far, everything we talked about is, I would put it on the level of hobby. All right. So all of these, you can say, if you're going to treat your crypto as a hobby, that's where you're at. But the next step from here on out, we're going to be talking about crypto as treating it like a business. All right, you're serious now. This is going to be some serious opportunity that you can make a decent amount of money. And there's a lot of great projects and different topics and sub pillars within the crypto space that we heard about so far on this call. But this is where you're going to start getting involved. And how that looks when you're getting involved, the very first step is you're going to be getting involved into a part of a community. So you're joining a community of people. And this is now where you're surrounding yourself with people of varying skill levels and experience levels. I'll get to that in a second. So joining a community, you're going to be rubbing shoulders with people that are a couple steps ahead of you. That's the faster way to get the results, by following those that already have the results that you want. So that's the very first step of trading crypto seriously. After that, we got the next step here. And once you're now part of a good community, and make sure you're joining the right one. This is one of the most sophisticated ones I've ever seen, is with the community at CoinFest, is you want to start using maybe some tools, resources. And so what you may look at is using some scanners that can help you identify AI opportunities that are, you don't have to be glued to the screen. A big common misconception in trading is you have to be watching the screen 24 hours a day. That's not true. Just this week alone, I've been trading about 5 to 10 minutes per day. All right. And the amount of insane results you're going to see, for example, making 35% for a lot of people may be considered a good return for 1 year. But imagine if you could make 35% in 1 month or 35% in 1 week. Well, that's actually something I've managed to pull off just in the last week, and the week before that, and the week before that. And I'll be showing how you can learn this. Anyone can learn how to trade from any experience background, and having the right tools at your fingertips is key to that. Secondly, after you've gotten to the using a scanner. You want to be getting joining some kind of get the proper education. You want to get proper education, and that involves using indicators, using leverage properly and safely and stuff like that to elevate your trading to the next level. Not just using, if I have $1, I'm going to trade with $1. You can actually amplify your gains by using leverage and margin, but you have to learn how to do it safely. And you can't learn that on your own. You have to have someone show you properly, guide you how to do that. And then what you want to do is get a mentor. If you don't have a mentor, then that's probably your next step. If you're at the education level, finally, you want to follow a guru, follow an experienced person who has the actual results that they can prove to you. And then finally is you are a guru. Okay, you're becoming a guru and you're creating a community. Okay. So these are the steps you're at. We're treating between a hobby and business, whether you're beginner, intermediate, or advanced. Understand that this is what you're looking at in terms of skill level when it comes to trading. And trading can now be done from anywhere in the world, on your phone, and everyone is happy to do this. But before I get into the actual lesson on a little bit, an example of what the heck does this trading look like? Can you really learn this? Yes, you can. I will show you in just a matter of a few minutes on how to start doing it yourself. You can actually see here that you want to be careful who you're following, right? So before I go on any further, I actually want to do this. I'm actually going to show you what exactly is the level that we're at right now. All right. So for example, here my name is Robert Paddock. I've been trading 27 years. I've won first place in the world in a global stock trading competition at the age of 21. And I've also traded everything: stocks, options, commodities, Forex, and futures options. I've done all of those for decades. But crypto, it was for the last about 5 or 6 years. All right. So I've written articles about them, consistently accurate. I predicted multiple recessions a year before they happened. And on top of that, teaching how to identify trends before they happen. We saw today, you're going to go online, you're going to see so many people posting, oh, I lost this much money, or what do I do now that I'm down, or why did it crash? Even though it's already crashed and they don't know why, they're still asking after the fact. While here, you can actually be part of a community that, you can talk about why it's going to crash in advance. I've predicted multiple accurate trends this year. Just in 2021 alone, I've actually been able to consistently double every month without using any leverage at all. Okay, we're talking about doubling every month. So that's if you have $1, you're only trading with $1, and you still manage to double every month, every single month this year. So this is kind of what the rate I'm at. Okay, so why is this important? Because people don't realize that you can actually make this a skill that you can identify with becoming confident in your own decision making, shuffling from one asset to the other, not just writing something for 10 years, because it will end up where you started. So yes, I have been invited on conventions and talked at Canada Place back in 2018. I pinpointed the bottom of crypto. We'll get to that, but also telling people how to identify and avoid different bad times, bad programs that you want to avoid. So we warned about altcoins coming in 2018, said stay away from that. We also warned about the IMF warning about central bank digital currencies back in 2018 when Christine Lagarde talked about that. Regulatory environment is huge. It's one of the pillars of analysis that is good to do when you're trading. So yes, we've had classes and stuff like that, but I'm not going to get into that. I want to actually teach you some things right now to help you multiply and speed up your compound interest. Because at the end of the day, this is what we're here for, is to learn how to make more faster and safer, right? So you can see I have in 2007 predicted the recession a year before it happened. I started to warn people, hey, you want to maybe get on the sidelines here. Finally, I saw things were back on track back in about 2009, 2010. I said, okay, things were about to start going up. Now, here's the problem. we've had the longest bull market in history. I'm talking about the stock market. So what happened is anyone that's been trading only for 10 years or less doesn't really know what a crash is. I'm talking like a real depression type crash. Okay. So this is if you're following someone that has experienced less than a decade, be cautious. I've actually experienced trading real money during the tech bubble crash. That's the first one over here that allowed me to learn what warning signs and flags to look out for. That helps me predict in advance. The key word is before it happened, the 2008 recession. And not only that, how to protect yourself, but how to prosper from the beforehand knowledge. Trading allows you to make money when things go up, as well as how to make money when things go down. You can profit in both directions. So, finally up in here, we were talking about how be careful, things may start cooling off again. And this is probably one of the most accurate charts I want you to keep in the back of your mind from now on forever when it comes to trading, because you can actually see sometimes you take the escalator up, but you can take the elevator down, and things move faster when they drop. You can make more money sometimes when they drop in less time. So, absolutely. Here's another chart of Bitcoin. So now we're talking about crypto trading. All right. So here's my background. You can see back in 2017, I actually accurately pinpointed the top, actually to the day, to the very day, December 18th, 2021. I'll never forget for the rest of my life. It's the day that Bitcoin futures commenced trading. That's one of the reasons I'll cover how I knew that could be a danger to get involved into the crypto, into the Bitcoin at that moment. Likewise, it's not just about predicting peaks, but also bottoms. Back on February 5th, 2018, I accurately pinpointed to the day that Bitcoin bottomed. How I did that was, again, looking at the regulatory environment. It was all about understanding that there was a banking Senate hearing committee, the Commodity Futures Exchange Commission, SEC was there, and they were discussing, hey, should we regulate it? Yes, we should regulate it. There were no real participants from the crypto space. It was mostly just regulators there saying, yes, we're going to regulate it. We didn't have, Ed there and any representatives from the crypto community saying, hell, hold on a second, how you're going to regulate this, right? So I knew banks are already starting to dip their tentacles into the water and say, we're going to control this from afar. But they said, oh, hold on, we're going to start regulating it maybe in 6 months. So that allowed that move up right after that green arrow. But then I saw that still they said they're going to regulate it. You got to be careful about when you're going to get in, when you're going to get out. So the major peaks and bottoms are all due to regulatory environment. And this, you can see at the bottom of the chart, this is 2018, right? 2017, 2018. So since then, I've seen exactly the regulatory climate and environment, what is coming with cryptos, even though they didn't know what is coming. So it's all about, predicting the direction of something. Not only will it go up or down, but how far up or down, where will it pause along the way? Here's the prediction I made once showing this formation of a chart. And then here was the outcome. You can see what the price actually ended up doing, which is almost exactly where we had it signaled, not just the direction, but also the distance and the reasons behind it before it happened, right? Here you got people sometimes saying, oh, I don't know why it dropped. After it already dropped, they still don't know. Yet here we are discussing prior to the move, why it's going to do something and how far down. So there's multiple styles of analysis we'll get into, but this particular pattern I showed you on the screen, I'll just get into that one right now to show you how easy it is to learn. So that particular pattern that we saw here is actually called a head and shoulders pattern. So picture a person, you got the left shoulder, the head, and the right shoulder. That's what it looks like. And there's also an upside down head and shoulders that you can use. It's a typical pattern because people are patterns and markets are patterns. And if you can learn to identify those patterns in the markets, you can become extremely profitable. You don't even have to predict what's going to happen 6 months from now. If you can predict what will happen tomorrow on the market, and you're always 1 day ahead, 24 hours ahead of everybody else, buying before they buy, selling before they sell, you can make a fortune. And you don't even have to be 51% accurate. I teach people how to be profitable in trading. Even if they're only right 20% of the time, you can be actually making money if you have a right risk reward ratio and strategy like that. But I'm not getting into that right now. So this head and shoulders pattern, basically, I've seen this identified in the Bitcoin chart even before 2016. There's many head and shoulders patterns here, both upside down and regular ones. So you can actually see, I'll show you a couple examples here. So we've got here, we've got one repeating here. It went down, it went straight into another one here, upside down one. It went up, back into another one on the regular direction, back into another upside down one, and so on and so forth. So these things repeat one after another. And how you basically measure this is that, and here's another one here, that you basically take this left shoulder first, you have to have an uptrend, then you have to have a peak, then you have to have a head that is taller than that prior peak, and then you have to have a right shoulder that is lower than that head. All right. And then the final step is you need to connect these lines together, and that is your neckline. And when the price falls below that neckline, then that's when the selling commences. This is basically a self-fulfilling prophecy. When people see that trigger, they go ahead, and I'm talking banks, institutional, financial traders with lots of heavy wallets starting to sell all at the same time, because they understand this pattern that existed not just in crypto, but in stock trading and other types of assets that you could trade a long time. And how far down it'll go is basically the height of the head is your target. So why am I showing you this? This one pattern, you can see that it will make you a different trader. So basically, take a look at this. You don't want to be like this guy, right? What comes down must go up. Buy the dip, except it just keeps on dipping. And then what? So that's just hoping. Be careful who you follow, because this is a chart that I did not draw. This is by somebody else. And you can see there's actually a head and shoulders pattern here. And I'm going to draw it for you so you can see it. So this head and shoulders, you can see here, and you've got the neckline, which means exactly where the word buy zone is exactly where you should be selling, because that means it's a confirmed head and shoulder about to crash. Yet, if you're getting the wrong person that you're studying from and following online, you could be buying when you should, in fact, be selling. And that's deadly to your trading. We have a confirmed head and shoulder, and those people that follow this trader will actually be losing money potentially because of that wrong information. So why I say always ask somebody how long they've been trading. That's why I've showed you. I've traded 27 years. I have, won first place in the stock trading competition. But I want to get back into the crypto, the Bitcoin. Why did I know that the price would peak at 20,000? And I was about 99% sure at the time. I told my friends at the time I had 3 reasons it can keep going up, and I had 47 reasons it can drop. They asked me for those 47 reasons. I explained it to them for 3 hours. All right. But my main 3 reasons, okay, were it's gone up too fast. We had Bitcoin at 5,000 for the first time, 10,000 and 20,000 almost October, November, December of 2017. So we saw that people will want to maybe take profits. We also saw tax season was nearing. And at that time, Coinbase was starting to be, attacked by the IRS. Also, we can see this is the main reason that the futures trading began. And I had traded futures for a long time. I know how traditional traders will move the commodity of Bitcoin based on how other commodities behave, which are less volatile, basically. And more importantly, you can profit when futures go down. Up until now, all you could do is, let's call this Peter and Sally. If Peter had Bitcoin for 11,000, he could only sell it to Sally for more, for 11. She could sell it to someone else for 12,000. He could sell it for 13,000, 14,000, 15,000, so on and so forth. You could only make money if the price went up and you found an even bigger sucker to pay more, right? That's how they were doing it. You couldn't make money when it was going down up until December 2018. All you could do is profit on the upward move or get on the sidelines and wait for it to drop to buy it cheaper. Okay, now this is what I've just drawn for you, where you're just flipping it to someone else for more to make money. That was the only way to profit. This is represented by this ball on the left, the blue one. Okay, now you also have in 2017, when futures commenced trading, where banks are getting involved, banks are going to be represented by the red ball. Banks are over here. They're like, you know, the thing with CoinFest is from day one, it's been all about being decentralized, take down the banks, replace them. They're going out of business. And I was over here like saying, yes, I would like to see that potentially. However, I live in the real world where it's controlled by fiat currency. The media is controlled by fiat currency. And I can see that they can still have influence buying and selling, information sources. So here you got the banks now saying we're launching a Bitcoin ETF. Guess what's going to happen? When people are trading Bitcoin and they're guessing what the price will do, go up or down, the futures are going to be an indicator. And the banks will now control the futures and the other half of the equation. So I knew now that either they did miss the train and they're going to want to jump on board and they're going to crash the price. Because remember, they can make profit in the downward direction. So they'll make money by pushing it down and then have even more to buy it. When Bitcoin was about 3,500, when I presented at Canada Place, it was really empty seats there because Bitcoin was at 20,000, dropped down to 3,500, and people weren't interested in it anymore. Again, there's the fear kicking in instead of the greed and fear. People tend to push the price too high up and too high down. Banks, though, they like to manipulate prices. They like to profit. They don't like to miss out. And in the real world, they are going to continue. I've actually talked about central bank coins back in 2018, 3 years ago, right? So this is how I saw that that's coming. So futures contracts commenced trading on December 18, 2017. Those were the symbols. And now the charts, they weren't very reliable for the first 6 months. I ignored the charts for the first 6 months until the indicators really started to kick in and volume started to kick in on these futures contracts. And now, after 6 months, we were able to use those indicators to accurately continue pinpointing analysis techniques, not just using regulatory environment, but also charts. So, back then people saying it's for sure going to 100,000. I said, hold on, because now banks can manipulate prices and push them down and profit when it goes down. So, you got to be careful. So markets are interconnected. It's important to note that, you can actually make money in both directions, but also when one thing moves, it moves everything. So stocks, options, commodities, Forex, crypto, everything, economic data, geopolitics, central banks, and news and current events. There's basically 4 main categories of analysis. We've talked about regulatory climate. There's technical analysis, is charting, and this is very easy to learn if you have a right guide. Geopolitical analysis, sentimental analysis, basically news, the reaction of the public to the news, their mood, as well as what people are tweeting, as well as different countries banning it or adoption happening around the world. So central banks are a huge key for this, and we've talked about that. So there's different things to understand when it comes to trading. You can look at multiple time frames. So for example, you can see here when the long-term chart, medium-term chart, and short-term chart all line up, you can see when would we want this chart to go up is when the long term of this chart matches up with the short term. And we can identify the best time of the day when all 3 time frames are going up, up, and up at the same time. When all the winds are going in the same direction, so to speak, then I'll send out my hot air balloon and chances are I know where it's going. So this can actually make you highly successful if you realize that being patient, being on the sideline is actually better to miss out on an opportunity than to experience a loss. So there's different techniques for actually entering and doing money management, but I want to actually show you guys hands-on actual techniques of how you can do some analysis of your own. I don't know how we're doing for time. Do we have the next speaker, because he actually was having a power outage, right?
Yeah, I haven't heard from him yet, but let me quickly check.
Yeah, let me know. If not, I'll just keep going, because you guys are going to get some wonderful tips here on how to do some technical analysis right out of the gate. So the first thing is price action. We're just looking at a basic naked chart here, and what we're doing is we're simply looking for the peaks and the bottoms. And we can see that there's zones where the market likes to behave. It's stuck in a range, right? And zones can go upward, downward, sideways. And this can help us see much clearer where the market may turn, where the trends may switch, okay? And also we can have much wider zones and support and resistance zones. We call these sideways trending channels. I like to draw a line halfway through the middle and then another line halfway between the halfway lines. What this does is it gives me an idea of, okay, I see the arena. Now I know where the ball has to stay within, and it's got about an 80% chance. No indicator, by the way, is 100% accurate because markets are always evolving. But if you can use an 80% accurate indicator with another 70% accurate indicator, your odds go up for looking for high probability setups. We're not just guessing anymore, because that's at the end of the day what a lot of people do. For example, looking at the same chart again, this is what most people do. They'll just randomly pick a time, which is right now usually, and they'll say, okay, right now I got to buy something. What am I going to buy? Look at this chart, and they're going to pick a direction. So this is what they do. They say, oh, it's going to go up. But the problem is, if you're doing it right at this moment, you can see that it can go up just as much as it can go down. This is not smart. This is not a proper way to do entries for proper trading. What you want to do is find something where you've identified the red and green lines, and you want to find something near the bottom, ready to have a higher chance of going up. So even if it goes down, it's only going to go down a little bit. But if it goes up, it can go up a lot. But let me ask you a question. If it's going to go up and it goes to the yellow line, remember what we said at the yellow line? Was it smart to buy at the yellow line? No, it wasn't, because it was 50-50. So would it be smart to continue holding on to this trade to the upside if we already knew that we got in at the right time? But if we get out at the yellow line when most people are getting in, not knowing what they're doing, I've already made my money, walked away. Thank you very much. See you for the next best opportunity, because we don't have to be in the market all the time. So another example is we said we can make money when prices go down. So where would we wait for an opportunity to sell? Probably when we're near the edge of the arena at the top. And this allows us to profit when we go down, but if we go up, we lose money. So if we're losing money going up, we can only lose a little bit, but how far down do we go? Let's just call it down to the yellow line. We're making $3 always, at least, for every $1 potential that we lose. Sometimes we can even make $5 for every $1 we potentially lose. So that means if we're just 50-50 accurate, let's say we flip the coin, we can look at any chart of anything, and as long as we're always making $5 or losing $1, I only need to be right 3 or 4 times out of 10 times, not even 50% accurate, and I'm profitable, because I made $3 or I lost $1. It's 3 steps forward, 1 step back each and every single time. So it's important to learn how to compound your growth here. And one thing you can do to do that is actually, why don't we just pull up a chart and I'll show you how you can actually compare some things together. But before I do, I'm going to draw for you one thing quickly. So we saw this here. I'm going to clear this. So when you're trading, remember, everything is linked together, and you can actually look for hints in the market. For example, if you've got BTC trading against, and let's call this USD. Actually, let's make this black. All right, so we got US dollars. So everything you trade is always in pairs. You're trading between 2 different things. The best way I can explain this is picture a seesaw, right? And you've got your fulcrum here in the middle. And what happens is whenever this one goes down, what happens to the other one? It automatically must go up, and they move inverted to one another. So that's what this line represents here between the two, is the same thing as this fulcrum. Okay, so every time we're trading 2 things to one another. Another thing to note is that anytime we see a chart, we're always talking about the one on the left. So if I see, for example, a chart going up, that means Bitcoin went up. If I like on the inverse, I see the chart going down, that means that Bitcoin, the one on the left, again, went down. All right, so that's something to note. And you can always see the chart at the top left corner of a chart whenever you're looking at something. So how do we know when to get in, when to get out of something? One quick tip is you can look for multiple related assets. For example, what's similar to BTC against the US dollar? How about Ethereum against the US dollar? All right. Another thing you could do is you can compare, obviously, Bitcoin to Ethereum, right? But for now, I'm going to keep it simple. I'm just going to go LTC USD. So what happens is I want you to notice something. All right. We've got US dollar in all three. Now, if the US dollar goes down, that means it goes down for all three of them. What does that mean that Bitcoin, Ethereum, and Litecoin should be doing at that particular time? They should all be going up. Now, why is this important? Because it's important to realize that watching the US dollar, watching all currencies, watching what the gold price do are all important. Even gold, you can say, here's a symbol, gold against the US dollar. It's also on the same side of the US dollar. Also, when gold goes up, when Bitcoin goes up, because the US dollar went down. So the charts should all look similar to one another. Let's go like this. Let's say that the Bitcoin went up, Ethereum went up, let's say gold went up, but Litecoin, let's say it went down. Because markets are not perfect. They don't do what they're always supposed to all 100% of the time. And that's perfect, because that irregularness spots opportunities for us to see, I think that this is good value. Understand that price and value are not the same thing. Just because the price of something went up doesn't mean it's a good project. All right. And likewise, just because the price went down doesn't mean it's bad. In fact, it may go back up to be in line with all of its other peers where it should have been initially. And that right there is an opportunity to make a substantial amount of money. And this is what it looks like on an actual chart when it's in actual progress. So let's have a look at a quick chart here. And I'll show you what that looks like here. So let's go ahead here and let's just pull this off. I'm going to turn off these indicators and look at a naked chart here. You don't need any indicators at first. This is a learnable skill. All we're doing is we're looking at Bitcoin versus the US dollar. You can see the top left corner, Bitcoin versus USD. Now, all I'm going to do is click on compare, and I'm going to compare, what was it? Ethereum. And we had Litecoin. Just those three for now. All right. And what we've got is three different lines. So the first one with the candles, that's Bitcoin. The orange one is Ethereum, and Litecoin is the blue one. And you can see, you can actually overlay these. So one thing I look for in the markets are ratios to identify opportunities of when is a good time versus a bad time to buy something. And you can see they often move similarly to one another. Now, if you look here, which one was at the top at this particular moment was Litecoin. It was the highest. Yet here it's ended up at the lowest. It swaps back and forth. So you can actually identify when is a good value to buy Litecoin. In fact, right now, since it's the lowest, it may have the more upside potential from the three. Again, it's not financial advice. I'm just showing you how to read ratios, right? And likewise, we see the candles here. We saw Bitcoin, which was from the time period we're looking at here a few months back. Since then, Bitcoin was at 0, but Ethereum was minus 31% and Litecoin was minus 55%. So the crash we just had of Bitcoin was all the way down almost exactly to where Ethereum's return was. So what I'm saying is, for a while, they were all moving in tandem, all at the same level, until Bitcoin kind of overshot and diverged away from Ethereum. So what happened? It basically just went back to where they should be together. And that was the explanation for this big decline. You can see it dropped in, these are daily candles. Just in 2 days, it dropped basically 25% here. You can see from this on this chart from where it was at the starting point. So you can actually see this is a reason behind it, rather than posting online saying, how come it fell? And I still don't know why. It was because of gravity. That's why, right? So this is all predictable, and you can do this on multiple time frames. You can even do it on multiple coins, right? If I were to quickly compare a few more, and I added XRP, USD, but .USD, I put a few more, XLM, USD, let's put BNB, USD, no particular coins. It's just to show you that this works for all of them, right? We can put Doge, we can put, anyway, you get the idea, right? So look what happens on the chart. You can see that they are correlated. They seem to be moving at the same time in the same direction most of the time, but not always. And that's the beauty of this. This is when you can spot opportunities, see which ones have gone up a little bit too much and they're due for a bigger correction than the others. And maybe if I was thinking about buying that pink one, I will hold off and wait for later on. So throughout the day, I do look at ratios. It's just one of the things I look at. I also want to show you now really quickly is one more thing that's really, really key for traders to show you that anyone can learn this. It is a doable skill. And this is, again, the Bitcoin chart. This time I'm going to look at some indicators. And what you can see here on this daily chart is one of the things I look for are a thing called divergence. So this is a MACD indicator, and I'm just looking at these two peaks here that I've identified that are standing out for me. And I'm connecting those two dots, and I'm also connecting them to the current level. And all I'm doing is I'm replicating this exact same, these lines at the exact same time, and it's going to identify for me basically a target for how far down the price can go. Now you can see this is where the market should have been going all along, but it didn't. We can actually see that, yes, the price hugged this line, it flirted with it, it stayed along with it the whole time like it was supposed to, but at a certain point, it skyrocketed away from the line. It's not behaving. And guess what happens? It will be punished and it will have to go back down to the line where it should have never left in the first place. You can see almost to a T, this crash we've just sustained that people are still scratching their head over is because they're not traders. They don't look at charts. They don't look at indicators. It's like driving down the highway blindfolded. Now we're taking the blindfold off and we're looking with not one eye, but both eyes, seeing the market, not just comparing one asset to another. Now we're comparing the same asset to itself with its own indicators. We can see that this entire decline was predictable and foreseeable because we saw it came exactly back down to where this divergence, where it moved apart from one another, moved back towards one another. And that was very easy to spot that trend. And this is something that it doesn't even have to be that complicated. You know, trading is very, very simple. It's once you learn how to do it, you can do the same exact charts, candles, indicators, and patterns for trading anything and everything: stocks, commodities, options, gold, oil, silver, forex, crypto. It all works the same way. So that's the beauty of learning how to trade. And I'll give you one more example here of an indicator. We're going to now look at, let's look at the, from here, we've got weekly candles. All right, let's go daily. All right, so looking back historically, we can see how this played out. I guess weekly is better. All right, so basically all you need to know is these are, okay, some indicators are lagging indicators, but what that means is that they take past data to print out what is an average of that and give you an idea of where the momentum was. But that is useful information to see where the price is going. So for example, here we've got a stochastics indicator. You can see, I want you to treat this just like a roller coaster for now. Okay, looking at the major moves up and the major moves down. We don't care about the little ones. I'm looking at the big moves, which is right now the next big move would be probably to the downside for this particular chart. All right, so now if I overlay this with the price above, you can actually see what ended up happening. Each and every single time that this indicator dropped all the way to the bottom, we had a nice move lower. Literally every single time. Now, these are not tiny moves. These are big moves. All right. You can see here also we have moves to the upside. So again, it's not perfect. It's not every single time, but by ignoring this, you are missing out on being able to see substantially increasing your odds and probability of success. And that's very, very key. And that's nothing to do with even using proper techniques on entering and stop losses and exiting and safety measures to protect your losses, because, you know, at the end of the day, you can see they replicate often. The indicators do tell a story. And what do most people do? Most people, let me see here. All right, so because I'm just looking for time here, but basically what I'm going to say is this. At the end of the day, you don't want to be like the average person that doesn't care about trading, doesn't care about indicators. They're missing out big time. And most people, they'll just buy something because they feel like it or because someone told them about it. And then what ends up happening? You want it to go up. That would be nice. But what usually happens? We see something drop. And then you're talking stuff like, oh, buy the dip, or, what do we do now, when they could have had a stop loss, predicted themselves saying that it'll automatically exit the trade for them if it drops this much, minus $1. But if it goes up, they can make $5, right? Instead, what do? They don't use a stop loss. And have you ever heard anyone say, I'll just hold on to it until it comes back to break even and then I'll get out? That's not a good strategy. Instead, what does the price do? Then going back up to break even, it goes even lower. Then they call me and they say, Robert, what should I do? I say, no problem. Buy it now. If you had a stop loss, you would have gotten out. You can now enter. And when it goes up a little bit, you're making profit. So it's a very, very important thing to understand that this is a skill you can learn. You don't want to just hold something for 10 years and find out 10 years later that you're ending up exactly where you started, when you could have easily profited in both directions, upward and downward, multiple times. And especially when you're using those indicators that tell a story. So there's a lot of things to learn. We don't have enough, not even close enough time to cover, all of it. It may seem like there is a lot of stuff and content to digest. Here's the good news. You don't have to learn everything. You don't have to learn every strategy out there. As long as you find 1, 2, or 3 key strategies and you stick with them, you discipline, and you can actually be extremely profitable in trading. This is very, very, very doable skill. I do have myself, I've been doing this for a long time. So I actually have been doing trades and I've been live streaming them once a week. And I have them every single Saturday. I actually do a live stream on Facebook and I show this is what I'm seeing right now and why. I talk about the news analysis and the charting analysis. And we've been spot on. Even today, I did a presentation. Every Saturday we do them a couple hours ago. And just from the last 7 days alone, I managed to find a handful of trades that all made between 25 to 35% return within a week. And that is just using zero leverage without borrowed money. Okay, just you put in what you have and that's it. And it still grew 35% in 1 week. And that's been consistent. We've had over the last year on these calls, I've predicted when it started with Dogecoin at 5 cents going up to 70 cents. Then at 70 cents, we said it's maybe time to get out because the indicators were overpriced and it's buy the rumor, sell the news with Elon Musk's going on Saturday Night Live. We actually streamed live Saturday Night Live with Elon Musk talking and the price of Dogecoin falling. And we've been extremely accurate. We have like dozens and dozens and dozens and dozens of examples of trades we were showing how to do the analysis for by teaching it through lessons, and it was extremely accurate. But this is a call we do every week, and all of the arrows I've gotten live streamed showing those predictions a week before. And I'm talking about saying stuff like there's going to be a 50% crash in Bitcoin within a month. And then it became accurate. Despite everyone else saying it'll go to 200,000, 400,000, a million, I was looking at what the charts were telling me. And this is something that I would love to have you to, if you want to come check it out, feel free to do so. How you can find that is actually, feel free, it's free. You can jump on Satoshi Saturdays. It's every noon Pacific time, 3 p.m. Eastern. How you can get there, it's www.satoshisaturdays.live. That'll get you directly into the Zoom room. I do give away a lot of information and knowledge and tips, tricks, and skills, and even some crypto. I know CoinFest doesn't give out crypto, but neither do I. But we do hand out some giveaways at these calls. And more than anything, you're going to learn. You're going to learn how to do it by watching a professional expert trader do it live in front of you, teaching what he sees, why he sees it, analyzing the charts, analyzing the news. And on average, we've been almost doubling every single month this year. That adds up compounded to over 1,000x for 2021 already. and the year isn't even over. And in a percentage gain, that's 100,000% return in 1 year without any leverage. So, it's definitely something that you want to learn so that you can go to your tax advisor and say, I have a big problem for you, you need to fix. But yes, I welcome people to come on on Saturday.
Right.
Yeah, definitely.
Yes.
You can ask questions in the chat there. If anyone has any questions right now, maybe I can handle a few if you don't have the. I know the speaker was having a power outage in Costa Rica.
Yeah, so we do have to wrap up. So thank you, Robert, for sharing. It's very informative, and hopefully a lot of you guys learn a lot about just some basics of trading, some of the signs and like different charting techniques. And yeah, so just an update on Drew. So I still haven't heard from him. So regarding the power shortage issue in Costa Rica, I do hope that he's okay, and I do look forward to getting a recording of the session so that we can send it out to everybody. So thank you, Robert, for sharing, and I'm just going to do the wrap up right now. So thank you everybody for joining us today and joining us for CoinFest. Hopefully you guys learn a lot about different aspects of crypto, like everything from like NFTs to DeFi to now you learn a bit about trading and such. So I hope hopefully you've learned a lot from CoinFest. And at the end of the day, it's always important to know about. I always tell everybody ask them about what is your why of getting into crypto, right? Because we all are in crypto for a reason, and it's easy to lose sight of that why, especially when you are in a bull market where there's a lot of things happening. And that's why I always I make it a mission to encourage everybody to reconnect with the why, because what good is it if you can make a lot in crypto but you lose sight of everything else in life, right? And there's a saying that what good is it to win the world but lose a soul, right? So I do want to help everybody, right? Through CoinFest and all that I do, and also through the connections we make, right? To remind everybody to not lose sight of that why, right? Whether it is to build up a future for yourself, right, for a family, or whatever reason, right? Have that why in place so that you can always focus back on that why and build the future that you are meant to have. So once again, thank you everybody for joining us today. And I hope to see you guys all for CoinFest next year, 2022. So thank you everybody, and have a great rest of the weekend, and also great rest of the year. Thank you everybody.